Is it smart to buy into an index fund when the values are on the low, aka the market is down, and times ahead look dark and grim? You see the storm clouds on the horizon. Is it a bad time to buy? That's a great question. The market has three directions, and that's it. It goes up, it goes sideways, and it goes down. That's all it can go. It can't do any loop-de-loops. It doesn't have other dimensions. Up, sideways, down. As an investor, you want to know what your plan is for each of those directions. You should figure that out right now if you don't have it. And spoilers, I'll tell you my plan in a moment. But truly, up, down, sideways, that's it. For my plan, when the market goes up, I buy. Because I know today's prices are that might be high, even if the times ahead look good or bad. If the market's going up, I don't care, because in 10 years, by comparison, it's going to be really cheap, right? As investors, we invest on the scale of decades. The market moves on a day-to-day basis. The time frames are very different, so it's important to compensate for that. Even though tomorrow the market might go up 2%, great. I might also go sideways to 2%, great, because I'm dealing with decades. Now, I will say, well, when it goes up, I buy, and when it goes sideways, I buy. Down, I do something a little bit different. I buy, and then I buy more. Even though I'm investing on the scale of decades, I'm not going to miss out on a sale. If you went to the grocery store and you saw a buy one, get one free, would you not stock up on whatever good it is, as long as you typically enjoy buying that good? Buy one, get one free sales are wonderful. They should excite you. And so when the market is down, as long as you have done a good job of your financial foundation, you have no debt except for a mortgage, and you have an emergency fund for 3 to 6 months, bad economic times are a fantastic time to be buying. When COVID-19 hit, I cut back while I was working at Vanguard. I cut back on all my discretionary spending and just focused on jacking up my 401k contributions as high as I could so I could take full advantage of the dip. Now, I don't know what the lowest point of the down period is. I don't know if then there'll be a moment where it goes up a little bit and then starts plummeting again. But my strategy was very simple. While the market was low, I bought and then bought even more. And when the market came back a month or two later, I just went back to my 20% contribution. No big deal. So is it smart to buy into an index fund when the value is on the low? Yes, because whether you feel the market's high or low over the course of 2 or 3 years, it doesn't matter. The question is, are today's prices low on the scale of decades? And the answer is probably are. They probably are.